Okay, so you know how real estate investment usually requires, a pretty significant chunk of change.
Mm-hmm.
Well, today we're going to explore how technology is kind of shaking things up,
Yeah.
making it possible to dip your toes into property ownership without breaking the bank.
That's right.
We're talking about tokenized real estate.
Exactly.
And rather just talking in generalities, we're going to have a deep dive into a specific asset
Right.
using a real estate property token analytics report to guide us.
Uh-huh.
So our goal is to really break down this opportunity and distill the most important information for you.
Yep.
The property in the spotlight today is a student house
Okay.
located in Vrhovci, which is in Ljubljana, Slovenia.
Interesting.
So we're talking about an actual multifamily residential building
Right.
in a European capital city,
yeah.
not just some abstract concept.
Right.
To start things off, let's get a clear picture of what we're dealing with here.
Sure.
What are the key characteristics of this property?
Well, looking at the overview, the address is Kludbova 22,
Okay.
and it's in the Ljubljana area.
Mm-hmm.
It's an urban residential multifamily property currently being used for student accommodation.
Okay.
And importantly, it's owned by a company.
All right, so it's an established property
Yes.
that's already generating income.
Exactly.
Now, the report also delves into the property's historical performance,
Mm-hmm.
and it's been around for a while.
Right.
What kind of returns has it delivered over the years?
The report shows that over the past 9.3 years, it's achieved an annualized ROI of 31.55%.
Wow, that's impressive.
It is.
What's driving those returns?
Well, that's the million-dollar question, isn't it?
Yeah.
Was it really good timing on the initial purchase?
Mm-hmm.
Or is it consistently strong rental income growth?
Yeah,
Or maybe a bit of both?
right. And how likely are those conditions to continue?
Exactly. Something to think about.
And speaking of impressive numbers,
Yeah.
the current market valuation is $625,000.
Up from a purchase price of $270,000.
That's a significant jump.
It is. That's an appreciation of $355,000.
Wow.
Or 131.5%.
That's huge.
It is.
Over almost a decade.
Yeah, and the CAGR, the compound annual growth rate, is 9.48%.
Right. That basically tells us the average yearly growth rate, assuming returns were reinvested each year, really highlighting the consistent upward trend in value.
So we've got a well-located income-producing property
Yes.
with a very solid track record.
Indeed.
Now let's talk about what makes this opportunity particularly interesting for our listeners.
Okay.
The tokenization aspect.
Right.
So how does breaking this asset down into digital tokens change the investment game?
Well, basically, it makes it much more accessible.
Yeah.
You don't need hundreds of thousands of dollars to get involved.
Right.
The report shows a maximum issuance of 100,000 tokens.
Yep.
They're trading under the symbol BSPT
BSPT, okay.
with a market capitalization of $625,000.
Got it.
Each token is currently priced at $6.25. So for $6.25, you can own a fraction of the student house.
Exactly.
That's pretty cool.
It is. It really opens up the world of real estate investing to a much wider audience.
Now, beyond the price, what about the potential earnings from these tokens?
Sure. The estimated earnings per token, or EPT, is 0.469,
Okay.
which translates to a dividend yield of 7.50%.
So that's the portion of profit distributed to token holders.
Right.
But the report also mentions a token rental yield of 13.2%.
Yes, that's an important distinction.
Can you explain that a bit further?
So the dividend yield is what you would actually receive in your pocket,
Okay.
whereas the rental yield is calculated based on the gross rental income relative to the token price.
I see.
It gives you a sense of the property's income-generating potential relative to your investment.
Gotcha. So it's helpful to look at both figures.
Definitely.
Now, what about the financial risks associated with these tokens?
Well, one key thing to note is that the report shows both the debt-to-token ratio and the loan-to-token value, or LTTV, at $0 and 0.00% respectively.
So there's no debt on this property.
Exactly, zero debt.
Which could be seen as a positive in terms of stability.
Absolutely. Lower leverage means less vulnerability to interest rate hikes or market downturns.
Right.
Of course, it also means they haven't used debt to potentially amplify returns.
That's a good point. It's a double-edged sword.
Exactly.
Investors will have to weigh the pros and cons based on their own risk tolerance.
Right.
The report also gives us some information about the broader economic environment in Slovenia.
Mm-hmm.
How does that play into this particular investment?
Well, Slovenia has had lower average inflation and interest rates than the global benchmark over the past 22 years,
Okay.
which could indicate a more stable economic environment.
Mm-hmm.
However, their average GDP growth over the last 2 decades has also been lower.
So slower economic growth.
Yeah. And their unemployment rate has been slightly higher.
Interesting. So while it might be a more stable market,
Yeah.
it might not see the same rapid increases in rental income or property value,
Yes.
exactly as some faster-growing economies.
Right.
Something to keep in mind for long-term investors.
Definitely.
Now let's dive into the valuation.
Okay.
They've pegged it at $625,000.
Right.
But how did they arrive at that number?
They used a few different metrics, including a gross rent multiplier, or GRM, of 7.6.
Which has a rating of 1, meaning minimal risk.
Correct. A lower GRM generally suggests a better investment relative to its income potential.
Right.
They also calculated a capitalization rate, or cap rate, of 8.88%.
That's basically the expected rate of return on the property.
Exactly.
And an 8.88% cap rate does sound pretty good.
It does, potentially a healthy return on investment.
Now, what about the reliability of that $625,000 valuation?
Well, they use a comparative estimate website,
Okay.
and the data is less than 6 months old.
So that's recent.
It is.
But they gave the source a reliability rating of 3 out of 5.
Right. Average risk.
So while it's a recent estimate,
Yeah.
it's important to keep in mind that it's not as definitive as a professional appraisal.
Exactly. For your due diligence, you might want to look into that comparative website's methodology.
Good point.
Make sure you understand its limitations.
Now let's talk about the tenants.
Sure.
They're the ones generating that rental income after all.
That's right.
What does the report tell us about the current occupancy and lease situation?
Well, the report shows a gross annual revenue of $82,500,
Okay.
which contributes to that 13.2% gross rental yield we discussed earlier.
Right.
The property can accommodate 20 tenants, and it's currently at 100% occupancy.
That's fantastic.
It is. They gave that a rating of 1, minimal risk.
So no vacancies.
Nope.
What about tenant concentration?
Also very good. The tenant concentration rate is 5%.
Okay.
Again, with a rating of 1.
So the income isn't reliant on just a handful of tenants.
Exactly, a good spread.
That's reassuring.
It is.
Now, what about the lease terms?
The lease maturity profile is 0.85 years.
Right. About 10 months on average.
Right, they gave this a rating of 2, low risk.
So the leases are coming up for renewal relatively soon.
They are?
Could be some turnover to manage there.
Potentially.
But on the plus side, the payment frequency distribution is strong.
Yes, 90% of tenants pay regularly,
Okay.
earning a rating of 1.
Consistent income is always a good thing.
It is.
Now, moving on to ownership.
Okay.
What's the structure there?
It's owned by a single company
Okay.
with one owner holding at least 20%.
Mm-hmm.
In this case, it seems to be 100% ownership by this entity.
Got it.
They've held the property for 9.9 years,
Okay.
and that received a risk rating of 2.
So fairly stable long-term ownership.
Exactly.
And to reiterate what we touched on earlier,
Yeah.
the report explicitly states there's no debt on this property.
Whatsoever.
No senior debt, no junior debt.
Nope. Completely debt-free.
All right, so that's definitely something potential investors should factor into their calculations.
Absolutely.
Now, this building was constructed in 1971.
54 years old.
That's right.
How's it holding up?
Well, according to the report, it's in very good condition.
Really?
Yeah, with a rating of 1.
Not bad for a property of that age.
Not bad at all.
What about expenses?
Total annual expenses are estimated at $27,000.
Okay.
The maintenance expense ratio is 3.64%.
So they're keeping up with the upkeep.
Seems so.
And the total expense ratio.
32.73%,
All right.
which received a risk rating of 2.
So overall, pretty manageable.
Yeah, the one thing missing, though, is data on the depreciation rate and the property's useful life.
Interesting.
Could be worth investigating further.
Definitely.
Finally, the report summarizes the risk ratings across all these different factors.
Uh-huh.
What's the overall picture?
Most indicators point to minimal or low risk.
Things like the GRM, rental yield, vacancy rate, tenant concentration,
Yep.
ownership complexity, maintenance expenses, total expenses,
All looking good.
and the property condition itself.
Right.
So it's a fairly low-risk investment based on this report.
It appears so.
Of course, it's crucial to remember that this is just one report,
Of course.
and further research is always recommended.
Absolutely.
So to sum up, Blocksquare, we've taken a deep dive into the student house Vrhovci,
Right.
a tokenized student accommodation property in Ljubljana.
Yes.
We've seen that it has a history of strong financial returns, currently enjoys high occupancy rates, and carries no debt.
That's right.
We've looked at the tokenomics, the broader economic context in Slovenia,
Yes.
the valuation methods, use the details of the tenancy, the ownership structure, and the key risk factors identified in the report.
Lot to consider.
Now, we'd like to turn it over to you, our listeners.
Yeah.
What are your thoughts on the potential of tokenized real estate to create new investment opportunities?
Right.
And specifically with this property being 54 years old, but in very good condition, how do you weigh that historical performance against potential future maintenance costs?
Yeah.
And the possibility of continued appreciation?
It's a balancing act.
It is.
Lots to think about.
We hope this deep dive has given you a solid foundation to start your own research.
Definitely.
What other questions does this analysis raise for you? What else would you want to explore before making any decisions?
Right.
That's all for today.
Thanks for listening.